the dYdX team, Corey, David, Vijay, why don't you guys kind of introduce yourselves, maybe share a little about how you got to the dYdX team, maybe like what you guys do for the organization, and then I can introduce Ashu and I kind of towards the end, and then we can go from there.
Great. Happy to kick things off from the dYdX trading side. So my name is Vijay Chetty, head of business development here. Been with the team just about 2 years now, based in SF, and have been working on kind of a range of things from institutional BD to growth efforts and marketing. And prior to that, was in the crypto space for about 6 or 7 years. So previously at SharesPost and Ripple, and before that came from Wall Street at BlackRock. It's good to be with you guys. I'll hand it over to Corey.
Great. Yeah, so this is Corey Miller, the growth lead here at dYdX. Also have been here for about 2 years. I'd say kind of largely responsible for things such as new user acquisition and marketing. And yeah, prior to dYdX, I was also in crypto, albeit more on the investing side of things. So was at a fund called Block Tower Capital for a couple of years. And then prior to that was at a seed stage venture capital fund. Get to David.
Hey everyone, thanks for having me. My name is David Gogel. I'm the head of growth and operations at the dYdX Foundation based in Switzerland. Been with the foundation for the last 8 months or so now and focused on everything dYdX token, DAO, governance related initiatives. Before that, I was on the growth team at dYdX Trading for about a year. Have also been in the crypto space for about 6 years now in various roles in the investing world and then on the startup ecosystem world in New York. Before that, I got my MBA at Wharton Business School, where I helped start the Penn Blockchain Club and was president of the FinTech Club. And then in a past life, worked on Wall Street as a trader and then in M&A as well. Thanks for having me.
Awesome. Nice kind of diverse set of experience. And Penn Blockchain Club is very active in the crypto community. So that's really cool. Question for like Dave and Corey, or sorry, Vijay and Corey. You guys both are part of dYdX Trading or dYdX? Just to clear up kind of the different entities within the organization. There's like the foundation, there's a trading side. Is there just dYdX, or is that like the same thing as trading?
Yeah. So dYdX Trading is the US corporation behind the development of the protocol. So that was a company founded by Antonio Giuliano, the founder and CEO currently. And that's the team really working on the technology, as well as the fully decentralized V4 version of the protocol that's upcoming. And the intent is really for that team to ship that and kind of hand over control to the community from that point going forward, and likely continue to have a role around that decentralized ecosystem in some way, assuming the community desires it. And so that's really how we fit in. And then I'll let David speak more specifically to the foundation's role and how the foundation works with trading, but there's very much a separation of efforts there.
Right. Yeah, so the dYdX Foundation is a completely independent organization headquartered in Zug, Switzerland. We were founded in the middle of last year, and really the foundation is the entity responsible for issuing the dYdX token and driving the progressive decentralization over the dYdX protocol. So we have a separate team, a separate board of directors, and really, a shared vision and alignment with the dYdX trading team, but really kind of a different scope of work. So we have employees and contractors all around the world, and really focus on everything DAO, token, and governance related.
Gotcha. All right. Well, thank you guys for, I guess, the introduction and kind of just also clearing kind of the differences between the two. at least on our side, I'm Jerry. I got Ashu with me. He's also on the team. We're both research analysts on the Messari team. We wrote the State of dYdX Q1 2022 report. I've done a couple of others as well, done a couple of other these calls. So for everyone here, we're excited to have you. And I think we can kind of kick things off and get started. Let me share my screen here and jump to, I guess, can you guys see my screen?
Yeah, you can see it.
Okay, sweet. So I think just like overall, just high level overview. I think the most important metric that we kind of really covered in the report, just from the quarter for dYdX, is trading volume. At the end of the day, dYdX is a exchange, and so users and trading volume are going to be kind of the main metric we want to look at to see the health of the organization, and also in terms of, to some aspect, growth as well. And kind of in this sense, what we see is, I think, to be expected. Just taking a look at DEXs across the board, exchanges across the board, like Q1, kind of a pullback from Q4. I wrote about this in the report. But just in general, I think the crypto economy or the ecosystem as a whole went from about $3 trillion to $2 trillion. So a 50% pullback. But if you look at like trading volume for dYdX, a lot less of a pullback, 23.8%, 24%. So I think in that sense, remains healthy, remains very active. Now, one of the questions I want to ask the two of you guys, or I think the three of you guys on this call, is there was kind of a report from Max Holloway in Xenophon Labs, and he's basically saying the trading volume of the protocol is heavily impacted by like token price. And how much do you guys kind of consider that in terms of your like rewards incentives program, or just like in terms of overall kind of incentivization for trading volume?
Yeah, so I'm happy to kick things off. So I guess just taking a step back, right? So we launched the token and the governance contracts in July of 2021. So really, that large inflection that you see from the left part of the chart to the right part of the chart is really, the key catalyst for that is the token and the governance contracts, which kicked off this process of decentralization for the community. And so, collectively, the team spent almost a year really thinking through token design, token economics, and the different kind of incentives that we were trying to drive from stakeholders in the ecosystem. And we think we built a robust ecosystem around governance, rewards, and staking, each of which were designed to drive growth and decentralization of the protocol. And so as part of that, there's kind of two main ways to earn the token from a trading standpoint. The first is what we call the trading rewards. And so that's really rewarding generally a combination of open interest and trading fees on the exchange. And that's really the largest pool of dYdX rewards is allocated to that rewards system. The second is what we call the liquidity provider rewards. And so that's really trying to incentivize two-sided liquidity on the platform and rewarding a combination of factors, uptime, depth, two-sided bid-ask spread, and then uptime on the platform, as well as number of markets supported. And so that's really geared towards more professional market makers and liquidity providers who are providing liquidity to the exchange. And so both of those pools are really designed to reward both taker volume and maker volume with drive organic behavior on the exchange. There's two other kind of ways to earn dYdX tokens. The first is through what we call the liquidity module. And so this is a staking pool where stakers stake USDC, and then community-approved market makers borrow that capital risk-free to provide liquidity on the exchange. And then lastly, there's the safety module where stakers can stake dYdX, which acts as the ultimate backstop for the exchange, and earn dYdX in return. And so those are kind of the four different rewards and staking pools that we initially designed to distribute dYdX to various holders and participants within the ecosystem. There's also an allocation for a community treasury that vests monthly that funds various activities in the protocol, like the dYdX grants program. And then there was a very substantial retroactive rewards program that got tokens into the hands of past users of the protocol. I think if you look, to go back to kind of your original question, how much do we look at token price when thinking about kind of these reward systems? The honest truth is we don't look at token price at all. We were very clear from day one that the current utility of the token is really around governance, and really handing control of the token to our most active users on the protocol, and allowing them to help shape the future of the protocol, and have kind of decision-making power over many aspects of version 3 of the protocol, and then all aspects of version 4 of the protocol, which is slated to launch later this year. So at least internally, we don't look at token price really ever. I think it's obviously probably pretty common for traders, including a lot of the research that Max Holloway and team put together, to try to come up with a dollar value for all of the rewards pools and staking pools that we came up with. And so I think over the last 8 months or so, there's been about 130 million dYdX distributed, which is a little more than 10% of the total supply of tokens to all of the rewards and staking pools that I mentioned. Obviously the dYdX token price has been quite volatile, but very much kind of trading in line with some other DeFi peers. And so I think if you look at the current price of around $4 or $5, there's been about $500 million or so in value that has been distributed to token holders over the last 8 epochs or so. So those are just some metrics for framing. But yeah, to go back to your question, we don't explicitly look at token price when kind of thinking through these reward systems.
Right. I think that totally makes a lot of sense. One of the things kind of covered, at least you can kind of notice from this transaction volume chart, and one of the things kind of covered in one of the, I guess, the discussions is like the way the current incentives are set. And I guess the reason I asked the question, right, is in a way using the token as incentives or rewards to reward traders, like you kind of talked about earlier, and trading activity is one way that leads to growth of the protocol. So just kind of like focusing on the growth aspect, the way transaction volume is right now, and the way I think the incentives are set, they are distributed, right, like every 4 weeks at the end of every epoch. And I know there was some discussion about having maybe more flat distribution, maybe like whether it's distributed daily or just on a more granular level. Do you, from your guys' side, and I don't know exactly kind of where that led, but from your guys' side, what are your thoughts on that versus kind of the current rewards incentive structure you have now?
Yeah, sure. Happy to take that. So this was actually like a really interesting instance where the community came together to really push forward a change that made a lot of economic sense for the protocol and community and exchange as a whole, and had built on a lot of thinking that the dYdX team had done going into the launch of the incentives. And so I think for us, it was really gratifying to see the community step up and take that ownership and leadership to really form an opinion around the trading rewards. And so just to summarize what happened, so Max is with, he started an organization called Xenophon Labs, and he and his team have been actively looking at the dYdX protocol incentives. And what they've found at a high level, and there's lots of supporting research behind this that we're happy to share as well, and that's available on the forums. But what they've found is that the epoch structure for rewards leads to late stage competition going into the end of each epoch, where it pays for traders to basically to essentially significantly ramp up their activity and take on a lot of open interest going into the end of the epoch in order to capture an outsized share of rewards. And the reason that happens is because reward value or expected value becomes more predictable as you hit the end of the epoch, because rewards are claimable approximately 7 days after the end of each epoch. So as a result, there's much more predictability about what the actual economic value earned is. And it makes sense for players to ramp up towards the end of the epoch. And they do that primarily by taking on a lot of open interest. And so Max and team analyzed the incentive in great detail and looked at historical data, did back testing, came up with sort of the optimal strategy. And what they found is really that it made sense to increase the weighting on the fee parameter of the trading rewards formula. So if you look at the formula, there's a component for open interest and a component for the trading fees paid, which obviously is geared towards those running heavy taker strategies that consume those higher taker fees. And so increasing, so Max's hypothesis was that increasing the weighting on that would lead not only to a better and essentially more fair distribution of rewards based on intended behavior, but would also be better for the exchange overall, and potentially reduce the sort of late stage competition that we see going to the end of the epoch by those who are trying to game the rewards. So all in all, the hypothesis and our hope is that this change that's going through the governance process as we speak will help to make those trading rewards more distributed and also lead less to that gamification behavior in sort of the late stages of the epoch. So both from a market fairness as well as a market integrity standpoint, it's a change that there seems to be a lot of support around and the community has really rallied behind. So we're excited to see how the rewards distribution and the trading activity evolves as that gets implemented in the coming weeks. So that's on the trading rewards side. And then there's also a separate liquidity provider rewards that David was alluding to that we can cover later as well.
Gotcha. And so when you talk about the trading rewards program, this is the one that I think there was a snapshot vote for, or there was some kind of measure of interest a couple of weeks back, right? Where, among other things, there would be less of an emphasis on open interest and more of an emphasis on the fee structure aspect, right?
Exactly. Yeah.
Okay. Gotcha.
And that snapshot vote had passed, so it's set to be implemented.
Right. And I think there was another aspect of that vote where another suggestion was to go and distribute dYdX rewards in USDC versus in the native dYdX token. Is that correct? And are you guys kind of able to kind of speak to that aspect of things?
Sure. Do you want to speak to that a bit, David?
Yeah, I mean, I think one of the most interesting aspects of governance is really people are debating all kind of proposals out in the open. And so if you go to our forums and specifically look at the thread that Jerry is mentioning, there's a lot of discussion around different ways to tweak the various formulas for either the trading rewards on one side or the LP rewards on the other. I think if you look specifically at the trading rewards thread, there was one or two comments for people kind of promoting the idea that reward should be paid in USDC instead of the dYdX native token. I don't remember exactly how much traction that idea received. But certainly, I think like any idea proposed on the forums, there's great ideas, and then there's also just ideas that require further analysis. I think overall, it's important to remember that like these formulas are not static, and the community and really has the power to change the formulas as they wish. I think to be able to do that, people have to not only share ideas but provide thorough analysis and try to build consensus to get a snapshot vote passed, and then for certain decisions, an on-chain vote. So, I think if you look at the quality and depth of research that Max Holloway put together for the trading rewards formula change, which was really just limited in scope to increasing the weight parameter and then decreasing the open interest weight parameter, that was backed by a very extensive research proposal with all of the trade-offs and considerations for discussion. And so ultimately, that's the proposal that passed. I think if we fast forward a year or 5 years from now, it's very likely that these formulas will continue to evolve as the best ideas surface to the top. The one, Jerry, that you mentioned, I think has its merits, but it's certainly something I encourage the community to continue to explore and debate and come up with a more concrete position on.
Gotcha. Sweet. You guys also mentioned this second proposal, and full disclosure to everyone here, I think this is a more recent proposal that was initiated in the forums, but there was this kind of liquidity provider related proposal. I'm hoping, is anyone able to kind of speak to that a little bit on the call, and maybe just share what it is and kind of why it was implemented or why it was proposed?
Yeah, sure. Happy to do that. So this change relates to the liquidity provider rewards formula, which, as David was mentioning earlier, is really targeted specifically at two-sided liquidity providers, also known as market makers who provide liquidity in an exchange. So obviously there's a lot of these types of players in crypto, and they are some of the largest types of trading firms and capital markets firms in this space. And so they can often serve this role where they stand as a willing buyer and seller for other users of the exchange. And they also have proprietary arbitrage strategies that they run often in tandem with those market making strategies. And so this program is really geared towards that class of players. And as David was mentioning, in the initial formula design, we wanted to weight the set of deterministic factors that really matters to successful exchange liquidity, right? And those can be quantified. So there's depth, how deep is the market? There's spread, how tight is the market? Uptime, how consistently is that liquidity available, especially in periods of volatility and market drop-offs? And then there's a separate reward allocation for each market. So if a market maker is active in more markets, they stand to earn more rewards for running the same strategy. And this has proven to be quite successful in terms of encouraging the initial liquidity on dYdX, to the point that we've had more depth at tighter spreads than both FTX and Binance at most times in the market. So that's something that we found has been very effective to creating essentially an inviting environment for retail users to come in and trade, and even large institutional firms who come in and trade 7-8 figures on a market buy or hedge or something like that. So it's really been valuable for us to take the exchange out to users, to non-US users, and see a lot of value in it. Now, that historically the payout of that rewards program, the LP rewards program, has largely been concentrated to a handful of players who have really optimized their strategies for that rewards program. So as a result, that's led to a lot of liquidity, but especially deeper down in the books, a lot of that liquidity is often not getting crossed. So it's not essentially useful liquidity to the exchange environment. So that's issue one. And then issue two, historically in recent months, is that the rewards distribution itself has been fairly concentrated to these 2 or 3 players who really optimized for rewards. So for those 2 reasons, the community, again, had rallied around this formula to basically research and analyze a series of changes. And I think what was especially interesting about this latest snapshot proposal that's making its way to the forums as we speak is that it was the conclusion of collaboration among a number of key players in the ecosystem. So Max from Xenophon was heavily involved with this. Chaos Labs ran a comprehensive analysis and will continue to support the evolution of this formula. And Wintermute, who's a major market maker and one of the few that's actually been earning a bulk of the rewards, actually made the proposal and worked with those other two to kind of analyze it. And so we think it's a really, from our perspective as a team, it seems like quite a robust, well-developed conclusion that we also hypothesize has the potential to solve those aforementioned problems. So essentially, really incentivize liquidity that's actually crossed and generating volume, and then also to lead to support more equal rewards distribution among the players who are providing that utility to the exchange. And so in a nutshell, the change is to basically add in a volume factor and overweight that volume factor in the formula such that players who are not only providing liquidity, but doing it at the top of the book and therefore crossing a lot of volume will earn more rewards than somebody who just simply provides a lot of depth in the books. So we think this is a great step forward to basically incentivizing that more active, useful liquidity. And it'll also hopefully lead to more distribution among the many other market makers who have been ramping up strategies for this rewards program as well. And sort of in tandem with that change, the weighting distribution for the other factors, specifically depth and spread, will go down. And then uptime continues to have an exponent of 5, just given how important that factor is for an exchange's success. So this formula change for LP rewards is being captured in a snapshot as we speak. And we're hopeful that it'll incentivize more market makers to come in and play on that side of things as well, along with just increasing the quality of liquidity on the exchange.
Got it. One of the things I think that's pretty interesting about what you said is you think about these large market makers that are already existing on the platform, and they get a tremendous number of these rewards that you guys are distributing, and they're actually the ones, like what you're saying, they're the ones going and suggesting this implementation, right? Am I understanding that correctly?
That's right. So not in all cases. So for example, for the trading rewards proposal that was suggested by Max and his team, for the LP rewards proposal that was proposed by Wintermute, but in tandem with Max as well as Chaos Lab. So there's often a lot of conversation that happens on the forums or between two parties who are active in the community, and that'll sort of lead to proposals being made. So from our perspective, we're very excited to see that because that's really the vision we've always had, which is that the stakeholders in this ecosystem, meaning the market makers, the prop firms, the traders who are most active, they're the ones who are also active in governance. And that's sort of the flywheel that we've always intended to create, not just on the institutional side, but the retail side. So it's really great to see these market makers who have these active roles and large holdings really take advantage of that and put their voice on the forum. And I think what's particularly stand out in this case is you had a market maker essentially actively acting against their own interest. Wintermute is one of the 2 or 3 who stands to gain the most from the status quo, yet a desire to kind of create an overall successful environment for all market participants led them to propose this change. And I think that's just really a testament to the power of governance and sort of shared decision-making, because you wouldn't tend to see behavior like that in other venues, especially centralized ones. So it's really encouraging from my perspective, at least.
Right. That was the point I was going to make too. Just kind of clarifying that, based on what you said, is it sounds like Wintermute, they benefit a lot, and the fact that they're going and being the ones to go and suggest this proposal in the first place is definitely very extraordinary and one of the aspects that's positive from community governance.
Yeah, I think the only thing I would add is there's a difference between kind of short-term benefit versus long-term benefit. I think even Wintermute, Callan in his post, refers to long-term sustainable growth of the protocol. And I think Wintermute recognizes that a too heavy concentration of rewards in the hands of only a few market makers probably results in a worse outcome over the long run. So I think it's great to see, Wintermute, among many others, have this longer term view of how do we build, over a 3 to 5 year time horizon, the largest crypto exchange. And, at times that means putting your individual interests, you know, at a loss at kind of the expense of growth of the overall protocol and growth of the overall ecosystem as a whole.
Right. Yep. That makes a ton of sense. And I think just adding on to that, one of the things I'm always kind of astounded by with dYdX is its ability to really compete with centralized exchanges. I wrote about this in the report when I was looking at volumes, how dYdX has comparable volumes to a lot of other centralized exchanges in the space. And so I can understand, I guess, from Wintermute's perspective, kind of backing a decentralized player and hoping to continue to grow the ecosystem and seeing those long-term benefits pay out, not necessarily just kind of immediately taking all the rewards as they stand right now. Cool. Great stuff. Ashu, I think we want to move a little to governance here. I think we're about halfway through the hour and want to just make sure that we have some time to kind of chat about some of these grant programs. Some of these grants that were funded, completed, and kind of maybe what gets you guys excited about what's upcoming.
Yeah. So just switching gears, I think the biggest sort of governance event over Q1 was the grants program, DIP6. So if you just want to talk a little bit about that, what it is, and then maybe tell us about some of the projects that have really impressed you, that really stand out so far, and then what's ahead in the pipeline that you're really looking forward to, or any of the RFPs, the request for proposals that you're really eager to see filled. I think that would be great.
Awesome. Yeah, thanks for highlighting the dYdX grants program and DIP6, which was definitely a major milestone, I think, for the community at large. I guess for those who aren't familiar, Reverie, which is a company kind of working on helping DAOs bootstrap from 0 to 1, is really kind of the mastermind behind the dYdX grants program. They ended up going through the governance process and getting, basically nearly unanimous support for about 750,000 dYdX to be funded, to be used to fund the dYdX grants program. And so, at the time, that was worth about $6 million or so to be used for grants, and really represented one of the largest grants, if not the largest grants program in all of DeFi. And so, the grants program and kind of their mandate is really quite large. They've backed over 60 projects or so at this point, and active contributors that span everything from product development, marketing, education, international growth, and then kind of everything in between. And so overall, I think it's been really great to see kind of that project kick off and really deliver widespread funding to many active contributors in the ecosystem. I think just a few hours ago, the dYdX grants program announced wave 10, I believe, of funding. And so that brings the total kind of dollar amount to, I want to say, around $2.2 million or so allocated to 60 teams. And so really, in just a few months, the grants program has really been, incredibly successful from my standpoint at bringing, active contributors and long-term contributors to the ecosystem, many of which are building really important tools and research that drive kind of the protocol forward. I think the other kind of exciting development to maybe double click on a little before I share some of the grants that I'm personally excited about is really talking a little bit about the Guernsey Purpose Trust, which was another DIP that was approved by by the community and implemented by the dYdX grants program. Effectively, this is pretty complicated, but really innovative legal structuring that basically creates, what's called a purpose trust structure in the Guernsey Islands, and effectively, converting the existing grants committee as well as the multi-sig into, a legal wrapper, which basically reduces the risk for all parties involved, while increasing or while also kind of streamlining the operational on and off ramps with operating a DAO. And so there's a lot of benefits that kind of come along with the trust structure. The dYdX Foundation published an open sourced a lot of research related to this, and I encourage all those interested to take a look. But the TLDR is that it does increase kind of the flexibility for the grants committee as well as multi-sig holders to be able to effectively operate the grants program while minimizing their personal liability, but still kind of remain or retain the key aspects of community control and the community mandate that was entrusted in them by the snapshot vote. So both the establishment of the dYdX grants program and then the establishment of the Guernsey Trust are both major milestones for the protocol, and together have in my opinion resulted in a very successful grants program overall. So that's kind of the structure at a high level. The one thing, the last thing I'll add is, again, when grants requested funding, the dYdX token price was about double that at which it is today. I think the grants program in just a few months has already deployed, close to 2/3, if not slightly more than that, to fund all existing projects. And many of which are either paid in dYdX tokens. US-based applicants are paid in USDC. But I think we're definitely nearing kind of the last innings of dYdX grants version 1, and excited to see all of the lessons learned that the Reverie team has collected, and I know that they're starting to think through what does the next version of the grants program look like and how to scale that with future plans. So that's kind of what happens behind the scenes with the grants program. But overall, I think the Reverie team has done a great job, and they're really the people and team kind of independently spearheading that overall project.
So what is the Reverie's team's specific involvement? Like, are they looking at applications? Are they, just kind of managing the inbound applications that come in, or, how does the foundation and Reverie kind of like work together, or what's the, overall level of involvement from their end?
Yeah, so really the Reverie team is really the single party that manages dYdX grants. dYdX Foundation, isn't involved. We help them kind of navigate the governance process, but ultimately they're the ones who put together the proposal, submitted the snapshot, and then once they receive the funds from the community treasury, have been working to operationalize that. And so, I think my understanding of kind of their role is they, set up the dYdX grants website. They help draft a lot of requests for proposals. They review applications, and then they provide recommendations to the multi-sig, the owners of the multi-sig who were approved by the community to approve grants on almost a weekly basis. And so there's just a ton of operational work, both on the reviewing of the application, setting up the trust structure, and then coordinating payments to 60 plus teams is a massive undertaking that I think, the Reverie team has done a pretty phenomenal job at over the last few months. Here and then the grants program, as well as various applicants, do reach out to the dYdX Foundation team, and we do provide feedback, where appropriate, but really the decision for funding is entirely led by, the Reverie team and the multisig team. And we really have no impact or decision-making ability there whatsoever.
Do they provide updates for completed grants or things like that?
Yeah, definitely. So they have the dYdX grants website, which has a lot of information, both in terms of the open RFPs, which, that list is updated relatively frequently, as well as all funded grant applicants, as well as all completed projects. And so the way that they've structured most of these projects is, at 25% of proceeds up front, and then 75% upon completion. We've already seen, probably, I want to say 7 or 8 projects that have been completed. And those have been shared, on social channels, on Twitter, and then on the website. And then a lot of teams are still working on kind of their various projects, and once completed will be updated on the website. I do know the grants program did fund an RFP for someone to redesign the grants website. And so I think a big part of their mandate is also to showcase all of the completed grants and make sure that all the users of the community have access to those and know what has been done, and provide kind of transparency around funding and completion of grants more broadly. But that is overall an ongoing process.
Gotcha.
Yeah, I think just maybe to follow up on the second part of the question, which is, are there specific grants that have been completed that I'm personally excited about? I would say overall I've been just really impressed by the number of applicants to the grants program. There's been over 60 that have been funded, but probably several hundred applicants that have applied overall. I think some recent ones that get me really excited. There was the dYdX info Twitter account, which launched maybe 2 or 3 weeks now, and that's just a Twitter bot that leverages API, like the dYdX API and on-chain data, and posts relatively frequently high volume trades, like stats around market volatility, new market listings, and then other insights going on the protocol, and sharing that programmatically on Twitter. I think that's really awesome to keep everyone abreast of the large trades that are going on dYdX, and really creating kind of that social loop for the community on Twitter. So that's one example that I was excited about. I think I've been really impressed by kind of all of the research that Max Holloway and Chaos Labs have done, and both of those individuals and groups were individually sourced via the dYdX grants program. And I think for anyone who's read their research and simulation analysis, I think that's probably one of the best outcomes for the dYdX grants program, is really to identify high value contributors and try to get them to help us think through, and help the community think through, these really complicated projects, and then ultimately become long-term service providers or contractors or employees for the DAO at large. And so I've been very encouraged to kind of see the quality of the research that continues to come out there. The other two that I'm really excited about that haven't been completed yet, but have been funded. The first is a project called Rabbit Hole. And so the grants program funded a rabbit hole quest to basically provide funding for community members who complete certain steps um, and get activated on the dYdX protocol. So the Rabbit Hole has funded a number of other quests, but I would expect some form of a quest to be launched for dYdX, where basically smaller holders can deposit funds on dYdX, do various actions, and then get dYdX as a form of a reward for using the product. And I think that's really great from an education standpoint. So that's one that I'm particularly excited to see. And then the last one is maybe a fun one is a company or product called GatherTown. GatherTown is kind of a Web3 online gaming space where basically community members can join, they can interact with each other in new ways through a mix of kind of a gaming interface and then video chat. And we think from a community building, hosting event standpoint, that's really a way for community members who are spread out all around the world can kind of interact in a more internet native way, but that's fun and different. And so a team is currently designing a dYdX branded GatherTown space, and we're excited to host community events and community AMAs in that format in the future. So I think those are just some examples on my side, but overall really excited to see all the initiatives and projects that are getting shipped and worked on.
Awesome. Yeah. Thanks for going through all of that. And so now we kind of have like 15 minutes left. So just for the last 15 minutes, if we want to talk a little bit about what you've kind of alluded to earlier regarding dYdX v4. I think that was the really big announcement at the beginning of Q1. So if you can just tell us a little bit about that, and then maybe any updates you might have since the initial announcement.
Sure, yeah, happy to talk a little bit about that. So dYdX v4 is something that a lot of the team is currently working on. The goal here is to make dYdX v4 100% decentralized. And so what that really means is, at the moment, dYdX is kind of a hybrid decentralized exchange. So parts of the stack are still operated by dYdX trading, that being the order book and the matching engine. And so the goal here with v4 is to make that 100% decentralized along with everything else in the tech stack. And obviously that's a really hard technical challenge. The product experience that has made dYdX so popular and that our traders have come to expect is partly because we are somewhat centralized still. And so when you want the performance that we have, it is quite challenging to do that in a way that, of course, is 100% decentralized. So with that being said, it's a large technical undertaking, and it's something that we've been working on for a little while now, and something that we will continue to work on for, call it, the next 6 months or so. We are making quite a bit of progress on what we think will be a really fantastic product. Having said that, there's not too much to share quite yet. We are on track, I would say, to launch something by the end of the year here. But other than that, we're not really in a spot quite yet to share what the details will be. But it will be quite different than what it looks like today. We have been kind of going deep on a variety of, call it scaling methods here, other layer 2s, other layer 1s, potentially creating our own layer 1. All of these things are kind of on the table here and stuff that we are going deep on. But yeah, having said that, there's not too much to share quite yet, but I do think the product experience will be really good. And it'll be something that all of our traders will be excited about. And I think the token community at large will be extremely excited about it as well.
Okay, yeah, great. I mean, Okay, you said that you probably can't share too much, so I won't try to press too hard. Is there some way that the team is thinking about sort of on-chain scalability for the matching engine and the order book? Those have been kind of intractable problems so far. So is there anything you can kind of expand on there?
Yeah, I mean, as everyone knows, right? If you try to build something that's fully on chain on something like Ethereum, you run into a lot of challenges, which is why we were one of the first products to ever go onto a layer 2, which is Starkware. I think we really proved that that method could scale, and at the end of the day, we made a really good product here. But as we look for the next stage of the protocol, although the current product is great, it doesn't really satisfy all of the requirements that we have to really become, fully decentralized and give, all the control to the token holders. So with that, we do believe there are ways to do on-chain order books in such a way that is exciting. Yeah. So again, it's not something that we're ready to share quite yet, but we are pretty optimistic that we will be able to get to a point that people are really excited to trade on the exchange, both for the users that are already on dYdX today, but also in the future. So making it easy and simple to kind of onboard to the exchange in the future and in perpetuity, and then also giving control to the community of token holders to kind of adjust the protocol as they see fit.
Okay. Yeah, and then one other thing that really intrigued me in the announcement post was around this idea of permissionless market creation. I think that's sort of a huge sort of attraction for DeFi. That's a big promise of DeFi. So how do you think that's going to look in dYdX v4, or how is the team thinking about sort of creating the rails for that?
Yeah, so maybe I could talk a little bit about how it works today, and then we can talk about what it might look like in the future. So today, market creation is kind of like a two-step process. Number one, the asset has to be listed on the actual smart contracts. So any new assets would have to go essentially to a token holder vote to theoretically add them to the dYdX smart contracts right now. Prior to the token launch, the dYdX team did kind of include a set of tokens that did not need any sort of governance launch to launch on the exchange. And so that's kind of the basket of tokens that we've been working on to date. Every week we're kind of listing one or two markets. But for instance, if any hot tokens were released since then and today, call it ApeCoin or something like that, those are not on the smart contract. So we would need the community to do a governance vote to add those. David could probably talk a little bit more about this, but there are kind of some people here who are working on setting up a standard to add new tokens to the smart contracts. Now, I mentioned it's a two-step process. So once they are on the smart contracts, it doesn't necessarily mean they would be added to the exchange. So as I mentioned before, dYdX does have some centralized components, and therefore we must abide by any regulations that we might be in all jurisdictions that we're in, right? And so having said that, we don't allow any equities to be added to the smart contract, or to be added to the exchange rather. And so essentially what this means is anything that is added to the smart contract still has to go through some sort of legal review to be added to the product. In the future version of the product, yeah, it'll likely be set up in a way that is permissionless. dYdX, the trading entity itself, we will not have any affiliation with adding new markets. So that'll strictly be in the hands of token holders. It's possible, it's kind of speculation right now about how this will work, because I'd say we're still working on it. But yeah, depending on who's operating the front end or something like that, maybe you'll have access to some markets and not others. But generally, the protocol will be set up in a way where we're removed from that process entirely, and we cannot control what goes on the dYdX protocol in terms of assets. So it'll be the community to kind of come up with, what they want to add, what risk parameters they want to have, and, perhaps any other methodologies they would want to add to the governance.
Okay, yeah, super interesting, great. And then I think one question that I had, and somebody had asked it earlier in the chat, was about distributing trading fees. So just how has the team or the community started thinking about how trading fees would be distributed in this model?
Yeah, it's a great question, and something that, again, will be entirely up to the token holders. The one thing that we have said publicly is that dYdX trading will not take any trading fees. And so, what happens to those trading fees, if anything, is kind of up in the air still. I imagine that will be something that is a hot topic in the future for the community itself. But, again, none of us on this call will have any influence there or any say in exactly what happens. It'll be quite an exciting time, in my opinion, at least, for the token holders to kind of come together and figure out a way forward.
Yeah, definitely. So I think that's it from my end. And then Jerry, I don't know if you had. You're on mute.
Sorry about that. I guess just to kind of tie things around at the very beginning, we kind of talked about the different entities within dYdX, and we're on this topic of V4. Really, like, how do you think that will change once V4 is implemented? Kind of like, what is going to be the role of dYdX trading at that point? And I assume like the foundation will still be around, kind of with its role within the community. But I'm hoping you guys can kind of speak to that a little bit.
Yeah, so I guess on the trading side of things, we'll still be very much involved in moving the protocol forward. As it relates to runway and things like that, we've set up dYdX trading in such a way where we have enough runway for 4 or 5+ years right now. And so we very much intend to be fully involved with the protocol even after V4 is launched. Over the very long term, I think the foundation and the DAO will kind of be more involved with determining what the DAO wants to spend money on in terms of development and things like that. But that's kind of a little bit more down the line, I would say. In the very near to midterm, dYdX trading will certainly be fully involved in aspects of the protocol that we feel we can have an impact on, while still remaining not 100% involved in every single thing that happens, right? So making sure that we're doing things that the token holders are interested in us doing things that we think will move the protocol forward, but at the end of the day, not being in actual control of the actual smart contracts and the protocol entirely.
Yeah, and from the foundation standpoint, our objective is really to foster community-led growth, development, and self-sustainability of the overall DAO and community. We're a nonprofit. We don't have a revenue model, so at some point we will likely or definitively run out of funding. And so for us, really our objective is really to accelerate kind of the maturity of the dYdX DAO. And so by the time V4 is launched, that we have the best in class DAO and best community possible to really be able to govern that successfully. So I think we've always expected to have a more limited kind of runway. We'll still be certainly around for a few years, and we're definitely scaling the size of our team globally. But I think there's a world where at some point we envision a lot of the resources and team members and partners that we're developing relationships with today. At some point we envision that all of that will kind of fold into the dYdX DAO at large, in a way that is kind of a step forward, where it is really token and community member controlled from start to end.
Gotcha. last couple of questions here, just for the community. Make sure we kind of just like get to them here. One of them is, when is dYdX mobile app out of beta? Do you guys have a timeline for that?
Yeah. So the mobile app will be out of beta within basically the next week and a half or so. Yeah, it's a really exciting update. The beta itself has been going really well. We had, over 200,000 people sign up for the waiting list here. We added roughly like 10,000 people, which is the max we could add via like Apple's, regulations there. But yeah, likely sometime next week, the mobile app will be kind of ready to go. And yeah, people will be able to fully experience this like great product that we've been heads down working on for a while.
Gotcha. Making sure we got everything here. One last question from Seth here. It looks like when you put maker volume in LP reward, I think something like wrongful volume, i.e. wash trading, might impact the reward. How will you plan to deal with it?
Yeah, so wash trading is something that is like arguably incentivized in some ways via these like various liquidity mining programs. Basically, the way we have already and will in the future combat this is doing technical reviews and manual reviews of all trades that happen on the platform. And so basically, throughout the epoch and specifically at the end of the epoch, we check for any suspicious, activity that's ongoing. And any traders that are identified as doing wash trading or any other source of nefarious activities, we disinclude them in the ability to have any like trading rewards from the epoch. And so, yeah, that is something that we actively monitor both internally, and we use external providers as well to combat. And so, yeah, we've done a good job of doing it to date. And I think if we do it, like if we make this upgrade in the liquidity provider rewards, a similar thing will happen as well. Where we will kind of just monitor it and, punish anyone who basically violates those terms.
Awesome. Well, I think we are a little past the hour here. I think we can kind of wrap it up here, but appreciate you guys all for calling in, kind of answering some of these questions and taking these questions from the community as well. Yeah, thanks for joining here.
Yeah, thanks for having us.
Yeah, thank you guys.
All right.
Thank you, guys.
Thanks, everyone.